Hello traders, Sid here with another video, and as usual in this video I'm going over some stocks that has good setup to take a trade on in this week. Before jumping into that watch list, let's talk about what's happening in the market or what happened in the last week. Last week we saw a good amount of selling pressure on both NASDAQ and S&P 500 futures. Now this selling was mainly due to the three reasons: inflation, geopolitical tension, oil, and other commodity prices going up. The market likes certainty, and that's the key ingredient missing from the current market, and that's why we are seeing this choppy price action or price action that is bound within a certain range throughout the market. As I said, last few days market is moving on the basis of the news rather than the fundamental, which makes trading more difficult as it moves sideways rather than picking up a certain direction. Let's take a look at the NASDAQ. Now NASDAQ is in the formation of this megaphone, and if you look closely to the NASDAQ, then you guys realize that 1300 level is a key level for it to hold. As long as it's hold that level, it can bounce off from that level pretty quickly and probably get some good recovery. But if that doesn't happen, then selling pressure might continue and we will see more sideways action, and that trend will go on probably going into the summer. I hope that's not the case. We will see market picking up a direction, either upside or the downside, and we will get a clear picture of where we are moving in terms of overall market, including NASDAQ and S&P 500 E-mini futures. Similarly, if we go to the S&P 500 E-mini futures, what we need to see that it holds the level of 4150, 4100 and 4000. Okay, these are the key level that it needs to hold to provide some kind of like a stability in the market. That is for the overall market update. Now moving on to ECONO Day events, there is a one main event that you need to pay closer attention to, and that is FOMC meeting, which is going to take place on Wednesday around 2 p.m. Eastern Standard Time. This meeting is going to take place on 16th, and it is very important to see what Fed wants to do regarding controlling inflation, because since oil prices are rising, geopolitical tension provides more uncertainty to the existing uncertain situation, and on top of that we still have supply chain issues that are making the situation even worse. If Fed decided to be more dovish because of the other factors, then we will see some kind of like a bounce in the market, but more or less we will see sideways price action. If Fed becomes more hawkish and decided to control inflation by taking some drastic measures, then that will accelerate sell off even more. Now jumping on to our this week's watch list, let's start with the VIX. Now the VIX measures the market volatility, and last week it was in the range between 35 to 30, and it was like that for quite a while. Now since the beginning of this year, you need to see that it was holding its level about 25, which is very high compared to the last year. We were below 25 for the most of the time. Now spike in the volatility will provide the further downside in the market because it's inversely related to the market direction. If VIX sees the volatility towards upside, that means market is selling off, and if it is coming down, that means market is kind of like going up. Now the spike in volatility will provide the further downside, as I said, in the market, so it would be better to take a look at it every day and have it in your watch list. So that's it for the for the VIX, I'm sorry. Now moving on to the SPY. Now SPY is still bearish. SPY is still moving the range from the low 410 to high of 440. Considering the last week's sell-off, I think the market will be green on Monday or Tuesday before FOMC meeting. If the outcome of the meeting, as I discussed earlier, if the outcome of the meeting is not good, then we will see SPY move towards 400 pretty quickly. And as you guys can see here, there is a gap to fill between 403 to 400, and if news is not good, then certainly we will see that gap fill quickly towards the 400. So everything depends on what Fed wants to do. Option activity indicates that we will see 400 movement between 400 to 420. Now moving on to QQQ, which tracks NASDAQ. It has similar price action, very much similar to what we have seen on SPY. So it has to maintain the level of 320. Otherwise, the key levels that we need to watch for when it comes to QQQ is 320, 315 and 310. So those three levels are important if QQQ decides to move towards the downside. But what if it wants to move upside? In that case, QQQ will move towards 320, 330 and 340 towards the upside. Now, one thing that you need to consider when it comes to this type of moves in major indexes like SPY and QQQ is that, like, even though you get immediate reaction either towards the upside or the downside after the Fed meeting, don't consider it as a market reversal or the direction decider that market will continue moving in the same direction, because usually initial reaction is the wrong reaction. Don't take anything for granted. Wait and watch. Now let's move on to Apple. So Apple saw quite a sell-off on Friday. On the downside, I would like to see it hold 150 level and overall move between 150, 160 and 160. Option activity says that the price can move between 160 to 175. Now everything, as I said previously many times, that everything depends on what's the outcome of the FOMC meeting. So we have to take that into consideration. Now moving on to Adobe. It has its earning on 22nd and it is in the falling wedge formation, and it may further fall towards 400 or the 390 level before bouncing back towards 410, 450 off of earnings. So I'm sure that they will crush their earning, but it won't help them much if the overall market keeps bleeding. Moving on to Amazon. Amazon announced 20-to-1 stock split last week, and based on that news, it jumped close to 3,000 level. It couldn't breach that 3,000 level. It couldn't go higher, even though then based on the news, it could have gone much higher, but it didn't. That means there is a ton of selling pressure at that level. So if the overall market is bearish, then I don't think Amazon will hold this level for too long. Either it can come back down to 2,700, or if FOMC meeting outcome is good and market already priced in the expected move, then probably we will see the sideways action between 2,900 to 2,700 for quite a while before Amazon started picking up the direction. Moving on to the Caterpillar. So Caterpillar made a parabolic move towards the upside on the price upgrade from the Jefferies on 8th March. The anticipated price after upgrade is 260, but it will take some time because the overall market is not suitable for upside move on any stock. Even if it has a good news catalyst and fundamental, it will take some time to go through that resistance towards the upside. Considering the current move, I think like it's due for a pullback towards 215 to 210. Moving on to the Facebook. Facebook is still falling. It's not looking like it's going to stop anytime soon before it reach to its pre-pandemic low or pandemic low. We might see a dead cat bounce from 190 to 200 level. We are in the middle of that drop that we had during the pandemic. I'm guessing that it can retest the 150 140 level before making any kind of progress towards the upside. Moving on to the FedEx. Now FedEx is showing bear flag formation and it got rejected from the 220 level. We were in this bear flag formation, we dropped down, bounced back again, and then get rejected from the lower trend line. Now it has gap to fill on the downside between 209 to 207, which is imminent at this point. Now 200 is a critical level for the FedEx to hold. If you look at the volume profile, there is not enough volume. If it breaches this 200 level, then there is no volume in between 200 to 175 level for it to catch up. Okay, and further down, if it dropped even below that, then we don't have enough volume to support its price between 150 to 140, and that will bring us back down and it will fill this larger gap coming down towards 140. Moving on to Google. Now Google is at the interesting spot. I would like to see it to make move towards 2500 based on market condition. There will be two scenarios. Like one, it will drop even below that and fill the gap that is there between 2470 to 2445. Else we can see a nice bounce back from 2500 level up towards 2600, 2650. So that's it for the Google. Moving on to LMT or Lockheed Martin. Now Lockheed Martin made a parabolic move on the basis of the war that is going on between Russia and Ukraine, and it's easy to see where it wants to go from its current price. It can easily come back to this trend line, upper resistance of this trend line or this megaphone, and bounce from there. Either that's possible or it can break even further and come down to 395. The overall option activity, it is targeting more towards that 390 395 level. Moving on to Eli Lilly. I added Eli Lilly because of this cup formation. There are two scenarios in play. Either we can bounce back from here, complete this gap fill before moving down, or we can break this rising wedge and come down even pretty quickly towards 260 level. And if we couldn't hold that level, then further drop is imminent. And at this price point, I would like it to come down towards 250 level, which is quite reasonable. And if we couldn't hold that 250 level, then further downside is highly likely. Moving on to MasterCard is forming a bear flag, and it can drop to 323 and level. Below 310, it is highly likely that it will go for the gap fill between 303 and 300. About 330, it invalidates this bear flag formation, and in that case the next target will be 340 to 345. Now moving on to the Nike looks bearish as well, and it seems like a falling knife at this price point. It can quickly move towards 100 based on where is it right now. Now it all depends on the earning report. Moving on to NVDA, it showed some strength on Friday, but it quickly faded away as the market couldn't hold its gain. Now at this point, I would like to see NVDA holding its 200 level if it reached to that level. Towards the downside, I would like it to hold between 220, 210, 200, or if it bounced back up, then the upward price range between 230 to 240. Moving on to the Square is also in the bear flag formation, and at the bottom of the trend line or this bear flag, okay, it reached to this lower level. I'm expecting it to bounce back from this level towards 110, 115. If it couldn't hold this $100 level, then it's highly likely that it dropped even further towards 80. Moving on to the target. Now the target, I added this one because its price and where is at this moment. So right now it's at 206, and we have this huge gap to fill towards 200, and based on overall market condition, I think like it will fill this gap before making any further move. So that's why I added this in the watch list. So just keep that in mind, or just keep an eye on it. If it broke below 205, then you can comfortably see that it moves towards 200 pretty quickly. And moving on to the last stock in our watch list, Tesla broke 800 level on the Friday, and it hovered over there for quite a while. I was expected it to move pretty quickly from 800 level to 820, 830 by the end of the day, but that didn't happen. That means there was no buyer support at that price level that we saw previously on multiple occasions. I would expect it to move between 750 and 700. Also keep this in mind that Tesla is still overvalued. What I mean by overvalue, so let's go to the micro trend. Now if you go to price ratios, the P ratio of Tesla is 162.32. Now as you guys can see here, in the prior years before 2020 it was 0. Okay, and during the pandemic time and 2021 it reached all the way to 1000 level, and now it's coming back down. Now the 162 is pretty high considering the price of the Tesla, because if you see the overall picture, this was the pandemic drop, and as you guys can see here, we were at 68 or $65 level, and from that level we quickly bounced back up towards 800 level, and from that point we had a massive pullback towards this 600 level again, and then we made another push higher. Now considering the market condition, if the Fed decided to raise rates and to take other measures to prevent inflation from rising, then these type of stocks will get punished harder. That's it for this video, guys. Thank you for watching, and see you guys again in next video. Bye.